Well, hello, Mavericks. This is Rob Reinhold again. Let's jump into this session, Skills of a Professional Trader. All right, the first thing I want to go over is this, and this is one of the sayings we've had at Maverick for a long time. Traders aren't born, traders are forged. No one was just born and there was a trader and they clicked buttons and all they ever did was make money. Okay, that has never happened before. Just like no one was ever a doctor the first time they picked up a scalpel. First time a soccer player wasn't the best soccer player in the world. This is a skill like everything else. It takes time, it takes work, and it takes effort. So one of the sayings we have at Maverick is traders aren't born, traders are forged. And when something is forged, metal is put through fire and heat, intense fire and intense heat. And that process hardens the metal. That's the definition of forged. That's exactly what happens on your path to becoming a professional trader. There's going to be some moments that are rough. There's going to be some heat. There's going to be some pressure. Everyone has to go through this process in order to become a trader. I wish I could wave a magic wand. I wish I could snap my fingers to make it that you didn't have to go through this. But this is the process. Now, the good thing is many of you have probably already gone through some of these moments, some of these pain points where you felt the heat, you felt the pressure, and maybe you got a little bit burned. That was all part of the process. You're going to be able to take those experiences and build them into a really, really nice trading system. So let's talk about trading, because we see the markets, we look at the markets, we see the charts, and we think, oh, we just have to master these charts. We just have to master the market. That is absolutely not true. First off, you can never master the markets because the markets are like a big wild animal. We can't control what it does. It's going to do whatever it's going to do. News is going to come out of nowhere and make things go up and down. We can't control it. There's going to be some periods of time where there's not a lot of movement. We only have control of ourselves. That's it. And as we said earlier, you are the variable to this. So instead of putting all of that effort into conquering the markets, what you really should do is put effort into, okay, the market is a big wild animal. How am I going to step into that cage with that wild animal to where I do not get eaten and to where I accomplish what I want to do? That is what you have to do as a trader. It's not about beating the market. It's about mastering yourself. You are the variable. You're the variable of this whole thing. Look, there can be markets where they crash. During those crashes, there will be traders that are making a lot of money. And there will be some that are losing money. Markets can be going up substantially. Some traders will be losing money as they're short. So as you can see, the market isn't the thing because the market's going to do what it does. So everything we do at Maverick is built around you as a person because the market's going to do its thing and you are going to be different. And you're going to be different than me. I can't hand you my trading plan and have you trade it the way I do because you aren't like me. I might have more risk tolerance than you. I might have less risk tolerance than you. Can you imagine if you were not very risk tolerant, you were risk adverse, and someone who was very risk tolerant said, hey, I want you to trade your money just like me? You would have a heart attack. And vice versa. Imagine if you were really risk tolerant and someone who was very, very safe, very selective, handed you their trading plan. You couldn't do it not because you weren't smart enough. It's because of your personality. And so we start all of our traders off. The first thing you're going to do in module number 1, trading skill development, is to take a trader personality test. Now this is based on the Myers-Briggs tests, and it's basically going to tell you what is your personality. If you've never taken a personality test before, it's going to be awesome. If you've done it before, take it again. You're likely to get the same results. But that's going to be the basis on what you build your trading plan around. Because If you are risk adverse, you have to build your trading system around that, or else you're going to fail. If you are an extrovert, like I'm an extrovert, I like action. I crave action. If I build a trading system where I only trade once a week, I'm not going to be able to follow that. I'm going to fail at it. Not because I wasn't smart enough, not because I didn't understand the charts enough. It's because I'm asking my personality to do something it doesn't want to do. So all of the problems that you've had trading in the past, if you've traded in the past, you can directly point back to your personality. You were trying to do things that your personality was not suited well to do. So we're going to start off at the very beginning, where you build your trading plan with an understanding of who you are and what you can and can't do. So this is just a quick little preview of what you're going to be doing in trading skill development number 1. You're going to take a trading personality test, and you simply just answer questions. How much do you agree or disagree with it? And as I said earlier, this is based on the Myers-Briggs personality assessment, but it's going to tell you, okay, you are an ESTJ. Now it's funny because you could tell me what your letters are, and I can already tell you your past experiences in trading. If you are an ESTJ, I can tell you, okay, number 1, you overtraded. You're like, wow, how do you know? Well, you're an E. You're an extrovert. Extroverts always overtrade until they understand that's in their personality. And J, I can already tell you that you have a hard time when trades go against you. You have a hard time admitting they're wrong. And they say, yeah, Rob, how did you know that? Because that's what all J's do. So in trading skill development, you're going to take this trading personality test. I'm going to go through some steps and some personality traits. And as you go through that, you're going to start to understand a lot of the reasons why you made some of the mistakes you did in the past. And we're doing all of this so you can build a system that fits you like a glove. It's not difficult to follow rules if the rules are easy for you to do. Now, one of the things I really enjoy is I love to go to the gym. To me, it's my 1 hour of meditation. I don't meditate. I've tried meditating, can't do it. But to me, that gym is just such a big thing. And so I eat well, and I go to the gym on a daily basis. It's just something I do. I've always enjoyed doing it, which is really nice because I don't have to fight a battle. I remember one of the guys in the office asked me, Rob, how do you do it? Like, I hate going to the gym, and I hate eating well. How do you do it? How are you so disciplined? And I said, oh, this isn't discipline. I'm simply doing what I like. Now, I told him, look, I hate doing some cardio. Like getting on a treadmill and running, to me, if I set a goal to myself to run on a treadmill every day, I can tell you right now, no matter how disciplined of a person I am, I will fail at it. Why? Because I hate it. But can I go do some other things? Absolutely. Some other cardio that I really enjoy. I can go out and play some indoor soccer. Those are the things that I love to do. I want to do it. So if we want you to succeed at trading, then you have to develop a strategy and a system that is easy to follow, that you want to follow, not one that you're fighting yourself over and over and over again. So that's where this is all going to start out. You're going to plan out your system. You're going to try to learn as much about yourself up front. A lot of the things you've done in the past, you're going to understand, oh, that's why I made those mistakes. And we're going to help you make some rules and systems that you can actually follow. So we're going to start out at the beginning. We're going to write down your trading plan. You're going to be building this over all the modules. And you're simply going to be planning out how are you going to trade. Now remember, the market is the market. You can trade to where you're a very short-term trader, where you get in and get out within a matter of minutes. You can plan it out where you get in and get out within a matter of days. You can do in and out within a matter of weeks. It doesn't matter. That doesn't matter at all. Because during those periods of time, the market's going to go up and down. And all three of those traders could be winners, and all three of those traders could be losers. What mattered is could they follow their rules and could they follow their trading systems? Position and risk management. We are going to be covering this over and over and over again. And people are always like, okay, Rob, no, I just need to know the charts. Look, charts are great. I love charts, but that's not where you make money. This is where you make money. You have to have a good capital allocation plan. You have to plan out, okay, how many losses can I take? Because what's going to happen is there will be a period, statistically, where you take multiple losses in a row. If you flip a coin, and you flip a coin 50 times, did you know there's a 30% chance that you will either have 7 heads or 7 tails in a row? That's fairly likely going to happen. If your win-loss percentage as a trader is 50-50, you're likely going to have 7 losses in a row. It's not because you're a bad trader. It's not because you're dumb. It's because that's literally statistics. If you are betting too big, you're going to take too big of a drawdown and you'll never be able to get back. These are the things that people don't think about. They think, oh, it's just about a chart. No, we're thinking about, okay, capital, position, and risk management. How can we win this game mathematically? And we're going to go through exactly how to do that in your system. It all comes down to a trading plan. We're going to plan out everything in advance, and then everything gets tested. Let's quickly go over the trading plan components. As I mentioned earlier, everything needs to be built around you. If this was an exercise and diet plan, we would sit down and talk about, okay, what are some of the foods you hate? Okay, let's not put those in the plan. What are some of the exercises you dislike? Let's not put those in the plan. We need to build this trading plan based around you. So your first step is going to be to basically list who you are, what you do, what you've done in the past. That's going to be your first step of your trading plan. The second step is going to be the capital allocation structure. And it's kind of interesting because everyone wants to jump into the charts, the entry strategies. This is where you're really going to focus on, okay, I've got this ball of capital, this pool of capital. How am I going to use it? How many trades am I going to do at once? How big are my trades going to be? What are my drawdowns allowed to be? What am I going to do after I have a nice run? How am I going to take those profits? We decide all of those things up front because those are the things that will determine a lot of what we do in our trading. So we get you down on paper. We talk about what you can and can't do. We talk about what are you going to do with your pool of capital? How are you going to handle it? And then we get into the trading aspect of it, where we get into relative strength modeling. This is going to be one of the first things you do. You are going to design your own relative strength scoring system where you look at all the currencies. You look at Bitcoin, you look at the yen, you look at the Australian dollar, and you will give them a score based on how strong or weak they are. This is going to determine what you trade because in currency trading, we are directionally trading. Things have to move for you to make money. So we want to find the things that are going to move to make us money. And one of the things you're going to get in your relative strength model is what's called a velocity score. A velocity score basically says, okay, this is how fast this is moving. We are going to avoid things with low velocity scores. We need movement to make money as a directional trader. That's going to be something very important that you do even before you look at it at the individual chart. Next, entry strategies. This is where you're looking at the chart and saying, okay, this is now timing. I know who I am. I know what I'm going to do with my ball of capital. I know which currencies are showing the most strength and weakness right now. Now it's about timing. I know what I want to trade. I know how I want to trade it. The timing aspect. This is the entry strategies. As soon as you enter that, all of a sudden you go into trade management. Okay, what am I going to do with this position? I've now done a whole lot of work to get here. It's either going to work or not work. And if it doesn't work, I want to exit as quickly as possible. And if it does work, I want to stay in it as long as possible. So you go into your trade management strategies. Once that trade is over, you go into journaling and adjusting. Okay, what did I do right? What did I do wrong? What can I do better next time? And then you literally go back to the beginning of your trading plan and you make some changes. So this is what you're going to be doing here to get your trading plan structured and ready to go. Now let's talk about the meat and potatoes of the trading system, and that is the actual trading. Now look, yes, there's lots that goes before and after, but the meat of this is the trade. As I said earlier, the market's going to do what it's going to do. There's going to be periods of time where you can gain a statistical edge. There's going to be periods of time where you can't. During those periods of time, you should not be entering trades. You only want to be entering trades in high percentage trading situations based on your specific rules called your playbook. So you're going to build out that playbook, and you're not going to make trades until these criteria are met. Once you do, you're going to take a position, and you're going to fully understand that even though you did all the research, even though you ran all the numbers, and even though it looks good, it could be the worst trade ever. So we're going to have our position management. We're going to bet an acceptable amount to lose. If that happens, we're going to take our loss, and we're just going to move on to the next one. If it goes our way, we're going to have strategies and systems in to hold that as long as we possibly can. Remember the 10 trade analogy, where I went through 10 trades, 4 were losers, 4 were like break even, lose a little bit, gain a little bit, and only 2 were great. But you saw that in those numbers, if you sold the losers at a reasonable loss and you held those winners and let them run for you, you could only be right on 2 out of 10 trades and still be a profitable trader. Position management, risk management is the key to this business. One of my favorite stories, and I cannot find this anywhere online, so maybe this never happened, but I heard this when I was a very young trader, and an older gentleman who was a trader was telling me a story about a study that 2 traders did back in the early 90s. Their premise was it didn't matter what stocks you picked. All that mattered was your position management. You sold your losers and you held your winners. And so, to prove this, every month they hung up the Wall Street Journal newspaper on the wall and they threw darts. Whatever stock that dart hit, they would then flip a coin. Heads they'd go long, tails they'd go short. So they picked 10 new trades every single month, and all they did was put in rules in place to sell losers and hold winners. And they made money every month for 18 months straight. I wish I could find that. I can't find that anywhere. This was back before the internet was around. So again, this might be a made up story, but I absolutely 100% agree with the premise that position management is everything. So again, your strategic playbook, this is going to be the meat of your trading system, is how are you going to actually trade? So everything gets developed into trading plan, and then the testing. I'm just trying to get you prepared for what you're going to be going through. You develop those systems, you develop those setups, and then you're going to go out and see if they work. Now, we love A/B testing at Maverick. What A/B testing means is people say, Rob, is it better if I sell it here or is it better if I sell it here? I love when people ask me that question. I say, wow, why don't you go find out? And when you're done with it, why don't you tell me what the answer is? Because I would love to know. Is it better to sell it when it breaks below a 20 moving average or a 50 moving average? Well, go and do A/B testing. So you test 100 trades with A and 100 trades with B. You look at the numbers. That's the better system. Whatever the numbers say are the better system. So you develop a plan, you test it, and then you make adjustments. After those A/B tests, you say, oh, you know what? It is better if I sell it when it goes under a 50 moving average than a 20 moving average. Okay, great. And then you go out and you test it again until you perfect it. And then it's a matter of staying consistent. And this number 5, staying consistent, this is where psychology comes in. And we do a lot at Maverick with psychology because the numbers are the numbers, the trading is the trading, but you are the variable. And there's going to be times where it's difficult. There's going to be times where you will take 4 losses in a row. It's not because you're bad. It's not because you're dumb. It's literally statistics. Can you go into that 5th trade and not screw it up? So I just want to quickly show you just a little bit about what you're going to be doing. On the left are our trading plan development worksheets. These are going to be some of the first ones you fill out, where you go into your personality. What are your strengths? What are your weaknesses? What have you done well in the past? What have you failed at in the past? On the right are going to be your setup sheets, where you actually will plan out, okay, when a currency is doing this, I'm going to enter here, exit here, this is the risk I'm going to take, where you literally plan everything out. Everything is planned out, and then everything is journaled. Now look, I am the last one that should be lecturing you about journaling. I hate journaling. I am not a write it down kind of guy. Whenever I give my wife a Valentine's card, I literally type it out, print it out, fold it, and put it inside the card. I cannot stand handwriting. Journaling, I remember when I was a younger trader, I had an older gentleman that was helping me out, and he's like, you got to journal. And I'm like, I hate it. And he said, well, you got to do it. You want to be successful, you'll do it. And I'm like, oh, fine, I'll do it. And I got to say, it was really, really valuable. Now, here's the great thing about today versus when I started. There are computer programs that will literally do all your journaling for you, where you have to do very little data entry. You just put in a few numbers, and it will keep track of all your numbers, because your numbers are who you are as a trader. What's your win-loss? What is your profit factor? You're going to hear that term profit factor. That just means stuff like for every $1 you lose, how much do you win? So if you have a 2-to-1 profit factor, that's a very good profit factor. If you have a 0.5 to 1, that's not a good profit factor. So you need to know your trade numbers. Stuff like, okay, what is your max drawdowns? In 100 trades, what was the maximum drawdown during that period? That helps you set your position sizing for when you go into your next 100 trades. Okay, I don't want to take this much of a loss. I know it's likely to happen sometime in the next 100 trades. Let me plan out my position size so it's not all that stressful. It's all about building and maintaining this system and constant updating and analysis. Now, I am not a big fan of what's called black box trading. Now, what black box trading is, lots of people have the allure of going online and someone says, oh, you can buy this computerized trading system and just let it run. And you never have to do anything about it. You just let it run. And it has worked over the past year or two perfectly. Okay, here's the problem. Markets change, volatility changes, everything changes. A black box system won't change. So I do like what's called gray box trading, where the trader is constantly updating the trading system. I'm a big fan of that, where things are automated, but the trader is constantly making tweaks and updating it. Because the markets change, volatility change, movements change. You have to be constantly changing this. So you're going to start out with your trader personality and your goals. You're going to build your trading plan around those requirements. Capital allocation structure, you're going to plan out how much capital you're going to put to use. What is your plan for position sizing? What's your plan for pyramiding? Pyramiding is something we love here at Maverick, where you will buy more of something that's working for you. Or again, short more of something that's working for you. We love to take a first position and then a second position and then a third position. There's nothing better than getting into a trade. You get in, you're up. You add to it, and you move up your stop to break even. It goes more for you, you add some more, you move up your stop to your new break even. So the worst thing that happens is that you get a break even. But if it keeps running, you might have a 4 or 5 or 6 time position, bigger than your first position you took. And when those run, those are massive, massive gains, all while never taking more risk than your first position size. It's fantastic. So again, you're going to plan that out. Relative strength. This is something you're going to hear every time you listen to a currency room, either on the weekend or on Wednesday. We go through relative strength all the time. What are the strongest currencies? What are the weakest currencies? That's all we do to determine where we're going to hunt. What pairs are we going to go trade? Build your entry strategies and your exit strategies, 4 and 5, and then journaling. This is just a cycle that keeps going. It just keeps going all the time. Now, over the next module, you're going to get into software. And I want to just quickly talk about software because this is online trading. So software is very, very important. You're going to have to be good at it. Don't worry, if you're not great at software and computers, we have an entire training center that helps you out. We have many short 2 to 10 minute videos that walk you through basically anything you need to do for the software. So if ever you have some trouble with software, go to the software. Let's do a quick review. First thing we need to talk about is you. Accept who you are. First of all, you got to understand who you are and then accept your flaws. This was something that was so difficult for me as a young trader, as I wasn't self-aware enough to even understand who I was and what I was doing. I am a strong extrovert, so I am an overtrader. I overtrade. And so I had to develop methods in order to not overtrade because I literally did not have the self-discipline to do it. I couldn't do it. So I did things like schedule appointments during trading hours where I'd get myself in trouble. I would have a plan where once I made a certain amount of trades for the week, I gave my security card to my wife and told her, do not give this back to me until next week, to where I literally couldn't log into my system. I know it sounds pathetic, but it's what I had to do until I could develop that habit. Next, develop a plan for your shortcomings. So admit who you are, accept who you are, and then understand, oh, I'm always going to have this problem. So make a plan that helps you out. If you never have to fight the battle, then you never have to have self-discipline. So we go through a lot of psychology here at Maverick. We have a psychology corner that you can jump in at any time and check out some of the videos on specific things. If you're having a hard time with hesitation, go to the psychology corner. Go find that video, watch it. All the videos are like 5 to 15 minutes. They're pretty quick. And they talk about developing a plan to get around those shortcomings. Once you get into the trading and the back testing, you track and test everything. And if it works, great. If it doesn't, you figure out, okay, what can I do different? Adjust, retest, and perfect your trading plan. That is where you're going to perfect it and hone it to where when you get ready for live trading, you're ready to go. Everything's already been planned out, everything's already been tested, and it just works. All right, I'll see you in the next session.